right, welcome back to the Financial Shepherd Podcast. My name is Joshua Casey Garland, certified financial planning professional, owner of Shepherd Wealth Management. Back again with video editing genius Ezra Kellerman, live from Pensive Distilling Company, Newport, Kentucky, 720 Monmouth Street. This is our happy hour spot. We'd love for you all to come out and join us on Fridays. Unfortunately, we can't be here every single Friday with vacations, traveling, meetings, stuff like that. But the intent is to be here every single Friday. Right around 4:15, and it's an absolute blast to be able to do a live happy hour here.
Do a live happy hour, cheers and debrief, talk about the week. That's where Joshua's the genius of the finance. I'm merely somebody who can hook a mic up to a tablet. So
it works for us today. It's worked all year long, so appreciate everything you do, Ez. But absolutely, this is the whole point of the show, is basically summarize what happened in the markets this week, why did it happen, and what can we look forward to in the coming weeks. It was a really good week for stocks across the board, pretty much positive across all the major indices. The story is still the same, though. The only sector of the entire S&P 500 that's been positive in 2022 thus far is still energy. Energy has definitely come quite a ways down from where it was trading at earlier in the year, right around $130 a barrel. I think we finished the day closer to $88, $89 a barrel. Still highly profitable for oil and natural gas types of companies. We talked about that all year long. The only other sector that's been positive, barely, is utilities. But after you factor in inflation, you actually have a real return that's negative. So all in all, good week for stocks. Today, though, the headline news was the U.S. labor market is still absolutely on a tear, rocking and rolling. Economists were expecting, believe it or not, as 258,000 jobs approximately.
Right.
And we posted a jobs report of 528,000 people that got hired over the past month, which is essentially double what economists were expecting.
Yeah.
So
I'm one of those people because you actually fired me and then rehired me. So here we are.
I wonder if they're counting that twice. I'm not sure how they do the math on that. But glad to have you back.
I'm glad to be back.
And secondarily, you're probably asking, well, why was the market down a little bit or slightly flat, depending on the industry that you're looking at today? Well, it has everything to do with the fact that the markets are forward-looking. Of course, it feels very good as a United States citizen to see that we're growing very rapidly. We're getting more and more people back to work. Not having enough people is a great problem that most countries would love to have. I think a lot of countries in Europe right now, Asia, all across the globe would love to be able to say that they've been able to put people back to work, like over 3 million people back to work so far this year.
Huge.
So I love seeing the number, but the market has an issue with it temporarily because we're about to get some more inflation data next week. And the market's going to anticipate that the Fed's going to continue to increase rates aggressively to tamper down inflation. And it gives the Fed the ammunition to do that as simply because they're looking at the labor market saying, hey, this economy is very strong. We're not in a recession. You can't say that we're in a recession when you have over 500,000 people getting back to work in 1 month and 3+ million people so far this year.
Right.
It gives the Fed all the confidence in the world that they can continue to increase rates to tamper down inflation without actually causing what everybody's calling a hard landing, or essentially putting the economy into a severe recession. Now, people would use the technical definition of 2 consecutive quarters in a row of slowing GDP. That is the technical definition, textbook definition, if you will, but nobody has officially come out and said that this is, in fact, a recession. And to me, something that we talked about all year long, markets have pulled back so fast in the first 6 months of the year, it felt like we've been in a recession all year long.
Yeah,
so
it has.
It's absolutely staggering numbers. The unemployment rate dropped because of the numbers that we just saw here today. It was at 3.6%. Now we're at 3.5%, which when was the last time you think that we had unemployment that low?
In a recession.
February of 2020, right before March of 2020, which of course was the pandemic caused by COVID-19. Stock market dropped, gave away about 4 years worth of gains in essentially a couple weeks or less, and only took 41 days to recover. So I'm not saying it's going to take 41 days for the volatility that we've seen just to disappear, but I think it is actually possible now. I don't know what the probability would be. It'd be very difficult to put a number next to that, but I do think it's more probable now that the Fed can actually pull off a soft landing by raising rates to control inflation and not actually put the U.S. economy into a severe recession or just simply slow down the hiring process that we're seeing here right now. They don't want to do that. They have a dual mandate, which is full employment. You could say that we're basically at full employment here.
Right.
Anything under 4% unemployment rate is excellent. And we still have to fight inflation. So the only thing that the Federal Reserve can do to do that is slow demand. And that's really what the markets are worried about. Is the Fed going to slow demand so quickly that companies all of a sudden don't want to hire anybody anymore? And now we're potentially looking at a severe recession at that point if that were to happen. So that's the reason, why you're seeing the market kind of take a pause today when we've had really a couple of weeks of excellent returns. In addition to that, we're looking into earnings coming up this weekend. My favorite company in the world, my favorite CEO in the world, Warren Buffett, Berkshire Hathaway, will be posting their earnings on Saturday. They like to do it on Saturdays because the markets aren't open, a lot less spotlight on them, although they obviously have produced very strong revenue growth and earnings results for a very, very long time. I think I talked about this all year long. Buffett has put more money to work in the first 6 months of this year than in probably about the last 10 years, $51 billion worth of new stock holdings or adding to positions that he already owns. So we'll actually get a pretty good look at what the results have been for Berkshire on Saturday. So I'm very excited to hear about all that. More specifically, I really kind of anticipate analysts asking Warren and Charlie, Warren, obviously the CEO, Charlie Munger, his co-chairman, asking them about their thoughts on the economy and whether or not we're in a recession, Federal Reserve. So all of those things, we actually get answers from the Oracle of investing, the Oracle of Omaha. So it's what he's.
That's awesome.
Yeah, so I'm very excited about that. So that's kind of like my Super Bowl for earnings. I'm very much in tune to earnings, but I really love to see what Warren Buffett and Charlie Munger have to say at Berkshire Hathaway. Outside of that, we're looking forward to some retail earnings next week. So Home Depot, Lowe's, and a whole bunch of other retailers will also be posting their earnings results. Nice. And we'll also see CPI data. So we're going to get more inflation data coming out next week as well. So next week's a huge week. Probably going to see either markets rallying quite a bit or maybe taking a pause and pulling back some gains that we've seen here recently, depending on really the inflation number. Earnings have held up really nicely in the face of all these headwinds. So corporate CEOs have done a great job of navigating the supply chain issues. They have a very difficult time with the U.S. dollar appreciating. So it makes it very difficult for them to overcome that hurdle. And in addition to that, obviously COVID-19 lockdowns in China and everything else that's causing issues in the chip space. I'm very proud, honestly, to not only be in this industry, be an advisor, but to be a U.S. citizen here with all these headwinds. I mean, the market is just exceptionally resilient. And I'll continue to say this, betting against corporate America over the last 240 years has been an absolutely terrible bet. So if you're betting against the U.S. economy, just be cautious on that. No doubt about it, because every time we've had a recession, a bear market, whatever you want to call it, we've had 26 of them. We've also had 27 significant recoveries. So I think there's actually some light at the end of the tunnel. We felt a lot of pain early this year. I think that we're getting closer and closer to saying, inflation's coming down. We definitely have not won that fight yet.
Right.
But hopefully we can see that number come down from where it was in the prior month with this strong jobs data. I think we're going to see a pretty significant reaction in the stock market if that's the case. Now, if inflation continues to go upward in the wrong direction, then expect a lot more volatility for sure. And last but not least, we also want to give a huge thanks to all the supporters of the show, the Financial Shepherd Happy Hour, Financial Shepherd Podcast. We also send out newsletters to all of our clients on a monthly basis. So the feedback for everything has been nothing but exceptional. If you're enjoying the show, please feel free to call us or text us any questions that you may have. Again, we do the big podcast, about a 45-minute production about every 2 weeks. And we try to do the happy hour every single Friday right at the Distilling Company, 720 Monmouth Street, right around 4:15, right when it closes. And our number, if you have those questions, 513-630-2664. It's been an absolute blast to be able to do another happy hour show. Ezra, cheers.
Cheers.
I hope you all have a wonderful weekend. And we'll do this again next week.
We'll
Y'all
see you
take
next
care.
Friday.